So thank you so much for joining us today. Happy Friday to you. I'm Marlon Bowling, your tour guide to the ag commodities. Always a treat to get to visit with you about how we're going to wrap up in the trading week here. And I am joined by none other than Brian Hoops of Midwest Market Solutions this morning. We're going to chat about the setup for today's trade. Brian, we have some relatively new information that just came across the wire here. It's our deliveries report for today from the CME or CBOT, however you prefer it. And let's take a look at these. Now, the May contracts here on the grains go into first notice date today. So here you go. This is the look at the deliveries today. It looks like we have, rough rice at 394 contracts, KC wheat 27, Chicago wheat 12 contracts, oats 1. Does that agree with what you're seeing this morning?
Yeah, good morning, Marlon. You could add Minneapolis wheat of about 39 contracts onto your graph. Of course, that's a different exchange, not the CBOT, right. But what it tells us here is you don't have any soybeans, you don't have corn, you don't have meal, bean oil. All those they're all very tight stock situation. That's what it tells us. Even these wheat deliveries are very minuscule. And it just tells us that our stocks numbers are very tight hands. So, normally we get a little weakness going into delivery period. That's not the case this year. Usually you see some strength, especially in the cash markets coming out of the delivery period. And we do expect that will be the case. Now, we didn't have any private sales this morning, but we have had some big sales of corn in the last 3 weeks, and some of that has been for this old crop marketing year, some for the new marketing season. So USDA will account for that in their May supply and demand report. Today, of course, last trading day of the month, looks to be like a record-breaking type month as far as our settlements go today. Unless something really, really goes crazy, we're going to have record high closes for a lot of these grains on a monthly chart. So technically, very strong markets. Fundamentally, very tight cash markets. You look at the weather forecast, it's not ideal by any stretch of the imagination. There is a lot of rain in the forecast and a lot of heavy rain that's going to keep a lot of producers out of the fields. Now, the one caveat to that is the hard red wheat belt, where they're expected to receive some really beneficial moisture. And you see the Kansas City wheat dropping overnight and kind of leading some of the pressure on the wheat exchanges because of that rain. That's going to be a benefit to them, but certainly a detriment to producers trying to plant spring wheat, plant corn, soybeans, and other small grains.
Well, to that end, I will say that adding rain on dead wheat doesn't necessarily help the yield a whole lot. So it does have that. Now, let's go ahead and take a look at our overnight trade here, Brian. We'll start with the corn market. Our quotes are provided by Bar Chart, and all in all, it was just kind of a quiet night. July corn finished 0.75 cents higher at 8.14 1/4. The deferred months were actually just slightly weaker. Soybean trade overnight, we go to that July contract there. Now, it was 9 1/4 higher at 16.94. Got as high as 17.03 1/2, but backed away from that. November new crop soybeans did gain 6 1/4 cents overnight at 15.27 1/4. There has been a lot of talk about the soybean oil market lately and how it has been supporting the soy complex. Well, it was lower overnight. July down 93 points at 85.67. And then that wheat that Brian was just talking about. Now, in Chicago wheat, admittedly, the condition is better than the hard red wheat. July down 4.5 cents overnight at 10.81 1/4. And let's look at that KC wheat as well. July there, down 14. Woo. 11.27 1/4. That's a lot of pressure after a high of 11.52 3/4 overnight. So kind of a washout there, if you will. And if you look at the spring wheat trade in Minneapolis, July down 7 1/4 at 11.84 1/4. So all in all, do you think we're just going to kind of tread water in the corn and soybeans before the end of the month?
I think it's certainly a likely scenario that we kind of chop around today. December corn does have that resistance around 755. Some people call it a double top there. I think eventually we take that out, but we may have to pull back first, get a little bit of momentum, take another run at it. But certainly pullbacks in these markets going to find a lot of buying interest because once we get this crop planted, or if we do, there's a concern that the water is going to shut off and we're going to turn this cycle cycle of cool, wet conditions into hot and dry, which would be really detrimental for yields for this summer. So there's that concern. So if you're a producer that's been making aggressive cash sales, look at ways of protecting yourself through the options market.
Isn't that crazy how that always happens that way? You just go from one extreme to the other. Okay, we're going to take a quick break here, Brian, and when we come back, I want to examine the setup for this livestock trade as we get closer to the weekend. We'll have more with Brian Hoops when we return. Well, we're back with Brian Hoops, and let's talk about this livestock trade here right now. Brian, in fact, let's go ahead and look at how we closed yesterday on the futures board. We go to live cattle here. Down by $1.12 on the close. June was at $133.90 per hundredweight, and that was the biggest loss of all the contract months. The deferred contracts weren't quite as weak. On the feeder cattle side yesterday, here you had the August contract it was up $1.45. It was at $170.40, and September was up 92 cents at $173.40. So it had a decent day yesterday. And then if you look at the lean hogs, well, they closed higher, but it was led by the back end months. Not necessarily a bullish sign, is it? We have June up 62, but July was up $1.45. What is that trying to tell us?
Yeah, you look at the hog market, that's a classic case of some bear spreading. It's kind of turned into a bear market from a technical standpoint. And the recovery yesterday was just, I felt corrective in nature, kind of with a little fundamental support because of the strong exports. So we may see a further continuation of this technical bounce, but it looks like, that rally will be sold. And so technical projections to the downside, maybe June 103, 106 area before this is all said and done. So I wouldn't be surprised to see some sort of a bounce here, and then that rally gets sold in the hog market.
Now, yesterday on our livestock summary, I saw where we had a little bit of activity, but it seemed like it was all in the dressed cattle. I did not see any live cattle sales yesterday. 232 to 233 was about the limit of it on a limited trade out there. Now, the carcass basis hogs across the country were down $2.16. So I just wanted to point that out. 102.57 was the average cash trade across the nation on a Thursday afternoon. Well, Brian, thank you for all the information this morning, and best wishes to you for a great weekend. Brian Hoops of Midwest Market Solutions. So that's how the setup is for the market today. Janet, back to you.